Welcome to Andy Finance AI. Today, we're exploring Bitcoin's market cycles, understanding our current position, and anticipating future trends. This analysis is not financial advice, but a data-driven overview based on historical cycles, on-chain trends, and macro market patterns that have shaped Bitcoin since its inception.
By the end, you'll understand where we are in the current cycle, what the next phases might look like, and how smart investors approach long-term thinking.
Cycle analysis studies how markets move in recurring phases over time, typically following a four-stage structure. The first stage is accumulation, where prices are low, sentiment is negative, and smart money quietly enters the market. Next is expansion, characterized by growing optimism and rising prices as more investors join in. Distribution follows, where investors begin taking profits, leading to increased selling pressure. Finally, correction sees the market cool down and reset, often with significant price declines. Bitcoin perfectly fits this model because its supply is mathematically programmed to change every 4 years through the halving event. Every halving cuts the mining reward in half, reducing new supply and historically triggering the next bull run. Let's examine Bitcoin's historical cycles, starting with the first cycle from 2012 to 2016.
After the first halving in November 2012, Bitcoin surged from a few dollars to over $1,000 in 2013, then corrected by about 85% in 2014.
The second cycle, from 2016 to 2020, saw the second halving in July 2016 push Bitcoin to its first major all-time high near $20,000 in 2017.
This was followed by an 83% correction in 2018, a typical pattern after such rapid growth.
The third cycle, from 2020 to 2024, began after the May 2020 halving, leading Bitcoin to hit $69,000 in November 2021. Subsequently, it dropped around 77% by the 2022 bear market bottom, demonstrating the volatility inherent in these cycles. Despite these deep corrections, each cycle created higher highs and lower volatility, signaling market maturation. As one quote states, each cycle gets longer, smoother, and more structured, showing Bitcoin's path from speculation to adoption. The fourth halving occurred in April 2024, reducing the block reward to 3.125 BTC. If history holds, we are now entering the early expansion phase, the build-up to the next major bull market. Historically, Bitcoin's strongest price acceleration comes 12 to 18 months after the halving. This suggests that mid to late 2025 could be the most explosive stage of this current cycle. Based on historical data, the next potential cycle top could range between $120,000 and $180,000. A subsequent 70 to 80% correction would likely lead to a bottom around 2026 to 2027. As another quote reminds us, history doesn't repeat perfectly, but in Bitcoin, it sure tends to rhyme. Here's a realistic roadmap based on Bitcoin's historical rhythm for the coming years. From 2024 to 2025, we anticipate an expansion phase, with the post-halving rally gaining traction and rising media attention. New retail inflows and a possible euphoric stage could emerge by the second half of 2025. The 2026 to 2027 period points to a correction phase, marking the end of the bull market and the start of a bear trend. During this time, 60 to 80% drawdowns are possible, accompanied by declining interest and liquidity in the crypto space. The 2028 to 2029 period suggests an accumulation phase, with the next halving around 2028.
Prices will stabilize, smart money will quietly re-enter, and institutional adoption will continue to build in the background.
By 2030, a new cycle is expected to begin, initiating another major uptrend with lower volatility but steady long-term growth.
As the saying goes, Bitcoin rewards patience. The winners think in cycles, not in days.
Of course, no model is perfect. Cycle analysis describes probabilities, not certainties. Macro events like interest rates, wars, regulations, or global liquidity changes can shift or distort any pattern. Think of cycle analysis as a compass, not a crystal ball. it helps you navigate, not predict. As a final quote suggests, those who use cycles to understand markets, not to time them, already play the smarter game. Bitcoin has endured 3 major cycles and is now entering its 4th, overcoming skepticism, crashes, and regulation to emerge stronger each time. Understanding these cycles doesn't guarantee buying the bottom or selling the top. Instead, it provides a clearer picture of your position within the broader market, building conviction and patience. In Bitcoin's journey, time has consistently proven to be the most effective investment strategy. Thank you for watching this Bitcoin cycle analysis. If you found this video useful, please like, subscribe, and share your thoughts on where Bitcoin might peak in this cycle.